Hello and welcome to another episode of Market Watch. My name is Usama Jifri. Sri Lanka's property market in the recent past has seen some notable attention coming across, and we have today focusing on Sri Lanka's IPO market itself, a new IPO which is set to come onto the Colombo Stock Exchange. With us today, RIL Property Limited. The company operates in a commercial property development space, and which has also received quite some interest in the market. The IPO is set to go on to the Colombo Stock Exchange on the 4th of April, and with 120 million shares being listed, which is a 20% float, and with the share price set to go in at 8 rupees per share. To enlighten us on this IPO as well as the industry salient factors, we have with us today representing the lead managers. We have with us Mikhail Mushin, and also representing the joint managers to the offer, we have Nilendra Veerasinghe from NDB Investment Bank with us. Thank you, gentlemen, for joining us today.
Thank you.
Looking at the industry itself, Nilendra, if I were to direct the question to you first, what sort of the prospects does the industry offer for investors?
Yes, commercial office space is especially what the IPO is about here. If you generally take the commercial property market, I think there are three main segments. One is the retail segment, and then you have the office space segment, and then you have warehousing complexes which are more interlinked with the logistics sector. If you look at the post-war period with the general expansion in the economy, office spaces itself is one of the segments under commercial properties which have seen significant demand drivers. Supply, of course, has taken time to catch up, and because of that there is a shortfall in the supply, but demand mainly has been driven by two factors. Firstly, on the foreign side, there has been several MNCs, foreign companies coming into the country wanting to open up branches, rep offices, fully fledged subsidiaries, and most of these entities require A-grade office space in line with what they are used to in other developed markets and some of the East Asian fast developing advanced economies. So the demand that's coming from the foreign side has been a significant growth driver, and also on the local side, like I said before, post-war the economy has been expanding significantly, and with that there is a whole new breed of local organizations which have grown in size, who have been operating in multiple locations around the city, who now see the importance of having one centralized location, a good address, so that they can have an office space which meets their requirements. So both these factors have been fueling the demand for commercial office spaces, and like I said before, supply has been slow to address this growth in demand, and because of that we could see really strong fundamentals as far as property developers are concerned in this segment.
So you brought up an important point, Nilendra, with regard to the foreign and local demand for the commercial property space. So if you could put a ballpark percentage across for us in there.
Certainly. If you look at RIL Property itself, their landmark project was the Parkland building, which sits in Park Street. And this particular building has seen almost 60% of demand coming from foreign entities. This number is on the high side because particularly the building itself was constructed to meet some of the international grade A standards, so that it caters to the requirements of international players. But nevertheless, looking at other similar grade A offerings in Colombo, I would say there is a significant contribution coming from the foreign side.
In terms of a business cycle perspective, where could you kind of position the current market, and looking at the immediate and long-term growth perspective, what can you put the commercial real estate sphere in?
Looking at the post-war period, I think we came through that initial stage and we are getting into a high growth phase. So demand is growing, people have seen the opportunity, developers are getting on board, supply is catching up as well, but clearly in terms of overall stage, I think we are in a very much of a growth stage.
Right. So in terms of the industry, I think a few important factors were brought across from us in terms of the demand outstripping the supply itself, and the bigger players who can afford to bring the amenities will be key characteristics in terms of capitalizing on this competitive advantage. And of course the immediate expectations is we are looking at being in a growth phase, which offer potential for the industry players as a whole, but of course as new players do coming, the challenges do present to the industry players as well. So that was pretty much on what the industry looks like. If I were to ask Mikhail, if you could give us an introduction into the company itself, RIL Property Limited, this is the IPO which we are looking at. Mikhail, quick introduction if you may on the company.
Sure. RIL Property Limited is an office space manager, owner and developer. Their flagship asset, the Parkland building, is a 22-story Grade A office complex, which is currently 91% occupied, with 60% foreign tenants and 40% local tenants. The company also operates the Bread Talk franchise in Sri Lanka via its fully owned subsidiary Foodbuzz. These are its principal lines of business, but it's primarily a company focused on the commercial office space segment of the market.
If I were to ask you in terms of the competencies, unique resources which RIL Property Limited can leverage in this market, what could you introduce us to?
Sure. RIL Property in the commercial office space, really, your key competencies revolve around a few factors. One is your location. Your location in respect to the host of factors around you, such as key government institutions, hotels, other businesses, and being positioned in the core business district is key for a lot of RIL Properties tenants who depend on easy access to all of these factors, combined with the network effect of being around all of them and being able to leverage that for their business success. So this is really the key driver, in addition to RIL Properties Parkland building and their amenities there. I mean, the Parkland building brought in a lot of A-grade features which were not available in the Sri Lankan market. It was probably in terms of parking, where you have the intelligent car parking systems, you have your high-speed elevators, you have a floor plate of 16,000 square feet, which is in the Grade A sector arguably one of the largest floor plates, and is very useful for a multinational company setting up in Sri Lanka. These factors are really what drove in the client base and resulted in a 91% occupancy within a 1-year period for RIL Property.
We will take a quick commercial break and be with you for more on the company and the IPO itself. Welcome back to the show. Coming back to RIL Property Limited, the company profile itself, we are now going to look into a little more in depth in terms of the company. And Mikhail, if you introduce us to the key personnel behind the company, Mikhail.
The board is chaired by Mr. Sunil Vijayasinghe and other notable professionals who also sit on the board. The management is spearheaded by a dynamic CEO, Mrs. Hiroshini Fernando, and her competent team of professionals who look into the operational aspects of the company and have their relevant backgrounds as finance and operations. And this competent team of management professionals is combined with a knowledgeable board has really been one of the more contributing factors to RIL's success.
Looking at the industry and the company's positioning, Mikhail, I mean, when we look at the competition and in the A-grade office space, commercial office space, where would you position RIL Properties and benchmark to the topmost and maybe median competitors?
Sure. In terms of competitive positioning, I'd say RIL Property again sits in the Grade A space. The Grade A space has seen limited supply coming on and seen significant demand as MNCs come in, and there is consolidation between the local players who prefer not to go into grade B or maybe quasi-residential office space, and prefer consolidating in grade A office space with all its amenities and benefits. This has resulted in strong demand, limited supply, and RIL property coming in has resulted in the grade A benchmark being pushed up a notch, because we haven't seen supply coming on into the grade A segment for quite a while, and I'd say they've carved out a niche in the Colombo 2 space, which is rapidly emerging as a alternative to maybe the Colombo 1 space, and I wouldn't say it's as desirable a location, but it's getting there.
Nilendra, just coming back to you, I'm sure you get asked this question a lot, considering you're from the investment banking background itself. From when you look at the prospectus and the company itself from a risk and mitigants perspective, what kind of safeguards can we see?
Right. So to speak on about risks from a layman's perspective, what needs to be made clear is that this is commercial office space. So there are very long-term contracts with your tenants. So your cash flows are assured for a longer period of time. There are inbuilt incremental clauses contractually agreed with these clients, and in most instances market practice is that you have a 10% increase every 2 years. So from a cash flow point of view, it's very secure, and there is very minimal downside risk. However, just to highlight some additional risks that come naturally with any property investment, clearly property pricing. There are concerns that property pricing is on a very upward trajectory and may come down. But what needs to be made clear here is that given the steep discounts that are offered in the valuation itself, there is a significant cushion in terms of cushioning that potential any potential drop in property prices that may be there. Apart from that, real estate itself is generally viewed as a very safe bet by investors. So we believe that potential investors can make use of this opportunity to benefit from the real estate growth story, the commercial office space demand that's out there in the market.
So we've seen the industry from an attractiveness perspective, and we've also looked at the company and what it has to offer. Moving across into the listing itself, Mikhail, if I direct this question to you, what exactly is the purpose, rationale behind the IPO itself?
IPO objectives, if I get to that, revolve around two main objectives. The first one is the company is raising 694 million to refurbish the Readyware building. This is a building which is on its Park Street property, and post refurbishing will have 59,000 square feet of grade A office space, which will add to its portfolio of currently 194,000, resulting in almost 255,000 square feet for the RIL property group. This is the main objective of the IPO in terms of utilization of funds. The secondary objective is the expansion of the Bread Talk network. Its fully owned subsidiary, Foodbuzz, has the franchise for the Bread Talk network in Sri Lanka, and they plan on expanding their outlet network from a present 7 outlets to 16 outlets over a 5-year period. 265 million of the IPO proceeds will be used for the first phase of this expansion. In addition to this, the company is also listing for the continuity of the business in terms of attracting competent personnel, broad basing the ownership, and really enjoying the benefits of a listing from a corporate governance perspective as well.
If I just come back to you, I think timing of an IPO is a very critical factor, and maybe the current market, I wouldn't say turbulent, but it is viewed as a bit lethargic even. Why RIL Property Limited's IPO at this current context?
Certainly market timing market conditions are not the best that it could have been. But if you ask me when would be the best time to list, nobody could give you a very definitive answer. So what we believe is, as long as you have the right offering, the right company with the right strategy, business and operations at the right valuations, if the shareholders are willing to come in at the right valuations, certainly an IPO can succeed. And we've seen in the past, market always goes through cycles, and whenever there are down cycles, good IPOs really change the overall direction of the market, and we believe RIL has what it takes to be one of these good IPOs.
Mikhail, if you could quickly run us through the briefly run us through the valuations and the main assumptions behind the values which you arrived at.
In valuing the company, we have valued RIL's property group separately and its subsidiary Foodbuzz, which operates the Bread Talk network separately. In our sum of the parts approach, which values the combination of the two to come to the value of the RIL property group, in RIL Properties property segment really to come to its value on the revenue side. At the Parkland building, we have taken each tenant, the number of square feet they occupy and the square foot rental, use those contractual terms. Most of the contracts have a 10% increment biannually. We factored these things in and we come to the rentals and the revenue over a period of 5 years. At the Readyware building, which a majority of the IPO proceeds will be used to refurbish and come up to Grade A standard, we've also factored in the fact that the building comes online in June 2018 and the revenues from that also come online. On the property side, a majority of your costs really are on your personal costs and your maintenance costs for the building. We have factored these in as well. In addition, you also benefit from gains in terms of property price appreciation and appreciation of the investment property held by RIL property. This has also been factored in at fair rates. In addition to this, we are Foodbuzz, the Bread Talk franchisee. We have brought in revenues as the outlets expand from the current 7 outlets to 16 outlets on outlet basis as they come online in the next 5 years. We have factored in things from the food cost, the packaging cost. We have considered each store-wise cost and revenue, considering the electricity, rent, labor for their central kitchen operations and also their stores to come up to their profitability as well. Considering all of these things, we have valued RIL's property group on a discounted cash flow basis and a proxy price to book value basis. In addition, we have valued Foodbuzz, its subsidiary, on a discounted cash flow basis. In combination, we come to a value of about ₹9.78, which we feel has a 22% upside based on our IPO pricing at ₹8 per share. Which is at very attractive multiples of 0.43 times book, which is in comparison to the listed peer median, which is 0.68 times, leaves a significant cushion in terms of valuation and for investors who are coming in via the IPO. We feel this is very attractive and it will really drive sentiment. We also have dividend yields coming in as the property yields increase over time as rental increments come in, the Readyware building comes online, and all of these factors combined, we feel provides a very compelling valuation story.
The value proposition for investors is always an important point, and Ilendra, if I ask you to conclude and to leave in the mind of our investors, what's the value proposition which is offered by RIL Property Limited's IPO?
I'd like to summarize by going back to what I said at the beginning. If you look at the total property market, you have residential real estate and then you have commercial real estate. And these two differ in terms of the ability for an investor to get direct exposure in terms of capital outlay. If you're bullish about residential real estate, any investor could go out and buy an apartment and benefit from the growth story there. Whereas if you turn to commercial real estate, particularly commercial office spaces that we're talking about here, not many investors would have the significant capital outlays that are required to make an investment, to acquire a large block of prime property, to put up a large scale building and have the expertise to rent it out, manage it, and then benefit from that growth story. So herein lies a very attractive indirect investment opportunity for both retail and institutional investors out there to benefit from the growth story in the commercial office space segment. So shares of RIL would be a very close proxy to the growth story of the commercial office space segment, and would be one of the very few stocks listed on the Colombo Stock Exchange that give that direct exposure to investors. So we believe, given the growth dynamics of this industry, we are quite confident that investors, both institutional and retail, would make use of this opportunity to invest in the RIL IPO and make this a success.
So there you have it. We hope our discussion has been a productive one for your investment decisions, and on behalf of the MarketWatch team, we would like to thank the gentleman for joining us today. We hope to see you next week, and on behalf of the team, we hope you have a very good weekend. Thank you and goodbye.